All right, everybody. Trinity John here from Simpler Trading. We're going to do some quick analysis on game. Well, I shouldn't say quick, maybe several minutes here because I really want to run through this with you guys because I remember several years ago when this came across the board, and I remember some of my first members saying, "Hey, John, we should buy the $200 calls. Hey, John, we should buy the $500 calls." And every single time I thought to myself, this is absolutely insane. That would never go up that much, and obviously this name has a lot of momentum behind it. It's moved quite a bit in the last several weeks, and so I want to give you my perspective on it. Now, I do have a position in this. I actually took a position yesterday before the close, which ended up being a really good decision. So the trade itself was up about 170% today on the equity side. And that's after the fact of, I was questioning myself like, John, where were you during this time? And I remember someone reaching out to me and saying, Hey, have you looked at GameStop? And I also thought to myself, I would not miss this opportunity this time. So before I go into tonight's analysis, I'm not in any way, shape, or form telling you to buy this, but I'll tell you the reasons why I bought it, why I stuck in it, and why I've trimmed the position now to a point where the shares for me are free. Okay. We're going to work from the top down and just kind of give you some broad analysis, if you will. When we take a look at the weekly, we'll notice that back in, this run here, back in January of 2021, we had that really big spike. And yeah, so we want to use some Fibonacci's on it. I want to come up here to the pivot high, and then I'm going to come down and look at the pivot low here, which is right there. So again, I'm just including and anchoring my coefficients from here to here. You'll notice that price has moved up and hit the 50 almost to the tick. Now, what's really important about this is that if bulls can continue to keep price above 52, it looks really solid for an attempt to get over 64. Now, I was able to trim pre-market, right here in the 70s, which was really, really nice. You will not see that on this chart because we're just looking at the weekly and not looking at that pre-market data, but we'll see that here in a second. So what does that mean? Well, the golden Fibonacci means if we were to get above this level, that means this trend that we are um, measuring is broken. That means this downtrend is broken. And in my studies, we're looking for an 85% probability that we would hit $107. Now, again, I say 85% probability, there's a 15% chance there that I'm completely wrong. Now, what would I like to see? It would have to be, I would say, at least 3 consecutive candles on a daily holding over this 618. So the first one would be a move like this. It gets really bullish. It would come back. I want to see it retest, and then I want to see a higher high off of that. I'd expect a rejection here at 94, a pretty nasty rejection, possibly all the way back to 77, maybe a tad bit lower. And then again, fooling everybody and then coming up here finally looking for about the $107 level. Now, what do you have to contend with going into the fact that we're not over the 50? We did not build value. Well, in my trendy Fibonacci that I teach is between the 38 and the 23.6. And I know you can't see that right there, but there's a 23.6 and a 38.2. When we're measuring from the top to the bottom like this is what we call the bear channel. Okay, so right in here. So yes, a very nice bounce off of some levels down here. We actually got what we call a trendy turn signal. And again, I wish I would have saw this. I wish it would have been on my radar so I could have, maybe taken a stake in this around $15 or so. But instead, I took it at, let's see, $29.99. So not bad. $15 later or 100% later, I took the trade. But again, you know, what since it's in the bear channel, your level that you really want to see get above is going to be that 51.72, and no reason to count pennies, let's just call it 52. You want also for this chaotic candle, so I'm going to take this off just for a second, but first let's go ahead and get some major levels. So we know the 77 is a major level, and what we're going to write up here is trend break. Okay. And if you guys don't know who I am, I'm Trendy John. I trade at Simpler Trading. I am a professional supply and demand trader. And you guys can always come and check me out there. We actually have a free webinar tomorrow. And during that free webinar, we'll talk, Melissa and I will talk about how not only has she grown her account 5 times since trading here as a professional trader, but how she used the Trendy methodology in her trading. She's one of professional traders with me here at Simpler, and we have a really nice, robust, big room where we share thoughts and ideas, and it's an amazing community. So if you want to check us out tomorrow, 7 Central PM, it's a free webinar. You can come over to my X page, which is formerly known as Twitter, and follow me there. I'm Trendy John, TR3NDYJON. Okay, so trend change here at the 618. Let's go ahead and put that up here. All right, so right there, these are major levels, and then this is going to be a major level, so we'll leave that. And then I want to show you how I'm going to use Fibonacci's to apply to this chaotic candle. And this is really going to set us up for a potential, buy off of this level tomorrow. So again, I'm going to come in, I'm going to use my Fibonacci's. I use, okay, this is really important. In this case where we have a gap up, and this is my Fibonacci that I use, and you can learn it from me. It's a little bit different than some people's, but man, does it work well. So what I'm doing is I'm measuring the gap up into the pivot high. Basically what I'm saying is we're coloring in the space that has a gap, and we're just pretending this is just one big candle. And we're going to measure this candle, and then we're going to apply that Fibonacci, but you'll notice that I went from the bottom to the top this time. And the reason why I do that is because in this case, all I want to know and want to understand is this one big move up. So the trendy methodology is applied the same, and as you can see, we're holding above the 38.2, and so we reverse that. This is what I call the bull channel. So yes, price has come back quite a bit, even off of those pre-market highs in the 70s, but guess what? It's actually doing okay as it's holding, far as what we can see here on this candle, above the 38.2. So that is very strong. That's great. And then down here, just like I showed you on the other, this level is going to be the 618 of the up move. And if it were to break down below there, that doesn't look so hot for the bulls. And I'm sure, anyone that's bullish would try to take the gap fill, and you probably get a really nice solid bounce there. But that is an overcrowded trade that a lot of traders try, okay? So once again, we have identified the 618 here of the bigger move, okay? And then we have the 618 that it needs to get over, which is 77. So these are really far apart, but these are very big major levels. Again, this 77.8 is the 618 of this entire move. And then this 618 is a trend change for the chaotic candle. So let's go ahead and copy that. We're going to move this down to trend change. Okay. And now you understand where those two major levels are. And then this is what I would consider the bull channel. So this 5130, yes, it's important, but I'm actually going to bring this down so you understand at 4670 that this is the bull channel. So let's just go ahead and identify that. So what can this type of methodology do for you? And again, so far we're just using fibs. This is really going to allow you to understand what price action is doing when it's in between these levels. You understand if it's consolidating in this gray box, that hey, it's still in a bullish channel. Okay, so again, we're going to put that right in here. We're going to label that. So you could consider this neutral. Okay, now I know that's a big move, 46 into 64, but if you're in a position like I am and you've trimmed already, then I'm not too worried about this in here. I believe this is where FOMO can definitely come in towards the top. I understand a little bit of, oh man, the rally's over around this 46, but really it's just neutral in here, and it's really healthy after a big imbalance in the market orders like this, okay? So keep that in mind. I don't want you to be too concerned unless we start to close under this from a weekly standpoint. We are looking at a weekly chart. So by Friday, if we're closed under 35, then yeah, probabilities suggest we're going to head back at least to this blue line here, 26, and possibly the gap fill, which is down at 18. So again, bullish. I love like checking out Roaring Kitty. I love watching Dumb Money. Like I'm right there with the masses. I mean, I bought this thing yesterday, so I'm right there with you. But I also want you to be aware of the technicals and why they're so important. Okay. All right. So this is what we have so far. Now let's go into the daily and see what we have. All right. So that's what the daily looks like. And right here, I'm not seeing anything that's really standing out to me except for the fact of this right here. And if you're a supply and demand trader, then you totally understand what I'm talking about. We actually had a signal here, and again, I wish I would have saw this. Why didn't somebody reach out to me here? We had a buy signal on our indicators. We identified that we had a demand zone that was being built here. That demand zone took 1, 2, 3, 4 days to create, which was a perfect buy as soon as I got this buy signal. And then price just took off. So guess what? This is, if we fill in this gap right here and take this candle, this is an inside and up formation, okay? So if you think, like, if you're listening to me and this breaks down and we're headed back and you're like, oh man, I remember this video, things are getting tough. This is where me personally, and again, disclaimer, I'm not telling you to buy here, but for me, this is where I'm definitely going to try to take a shot. Again, my shares are free now. That's how well I did on the upside and trimmed. But again, this is where I'd take a shot again and add into the idea that it gets a bounce. So if for some reason it pulls all the way back to here, all right, and keeps coming down, this is where I want to take my shot between 20 and 14. Believe me, people will be scared. There'll be a lot of news about how this is just crap and that you got scammed and yada, yada, yada. Same thing happened 3 years ago. It pulled back pretty hard and then we got a bounce right where we expected. So again, this is my demand zone. Let's go ahead and make it green. Okay, right there. And we'll go ahead and just write the word demand in here. All right, and then let's take it into a little bit smaller time frame. And there you will see that we came up into that trend change. I believe that's 77.8. So right here, I want to identify this, and I'm going to identify it. Um, and I know it looks like crap right here. All right, but we'll go back to the weekly and see where that is. Okay. So the 4 hour, this is really important. Notice that we came back into the cloud. So I'm just using EMA cloud here, 9, 9, the 22, and so forth. These are levels that I really like. And basically, as long as price can hang above here and be supported here, just like it was from a short-term time frame, this looks fine. Okay. Now the topping wicks, just for future reference, anytime you see a top and wick come in, you really want to be careful. This is showing us that there's a lot of bear pressure there, a lot of money pushing stocks down. All right, so very important that you're taking note of these. As of right now, the cloud is support coming around that 42 to 40 level. If we make a new high above 57, 58, I would expect it to come back up here and try 64, 69, 77, so forth. Okay. All right, now let's go back to the weekly. And where is that level? There it is, 77. All right, 79.89. So you can see we came very, very close, close enough, if you ask me, to the 618 of the overall move I showed you. Okay, so again, right here. And matter of fact, if I come over to my orders, I just want to see where I trimmed my game today. And I got to go through my orders here. Give me 1 second. And from what I can see here, I trimmed at 68.57. So not bad. 68.57. All right. So again, this is the blueprint. I think it looks great. Um, I know what it means for a lot of traders to sound cautious on this. I really went on, you know, down memory lane on this name, and I just knew for myself My allocation is what was important, and I want to make sure I end with this part of the video. So it's real easy to marry the idea of something, to be involved with the ideology and so forth behind the trade. Um, it's really, really important to understand that. I, for one, love this story, but I'm a technical trader first, and my allocation is the most important thing. When I put this position on yesterday in my wife's account, I made sure that whatever I put in there, that if I woke up tomorrow and it was a sad story, okay, that I could take it on the chin and still be able to trade my regular trading day. And that's what I want to leave you with. Trade with what you're comfortable losing, especially when you have news catalysts like this that are pushing prices up and very, very volatile. If you get into options, if you like to sell options, okay? When I say sell to open, that's completely different than what the masses typically do. So you have to have a large enough account. I can sell options in my account, but it's very dangerous, especially when you're flirting around with volatility and momentum like this. I heard a couple big names out on X yesterday say, hey, I think I might sell some calls against this. Yeah, good luck, right? I bet you're really sweating this morning. So you got to be super, super careful. And matter of fact, right now, an aftermarket, okay, on Robinhood, this is trading at $56. So it's up another $6 from where it closed on Thinkorswim. All right. So there's a lot of momentum there. And if you think about the number, it's still in here in the bullish channel. Bulls. What you want to see tomorrow is above 64, let's say 64 and a half. You don't want to see below 35. Everything in here is still bullish. Just let it do what it's going to do. If you like this video, please give me a like. Please spread it to people who you think might be trading game. I believe that it can really help them out. I hope you like this analysis, and if you find it interesting, I apply the same kind of analysis to everything we trade, including futures, options, equity, all that good stuff. Okay? I really appreciate you guys. Good luck. I hope you do really well, and have a nice night.